Welcome back to the Daily Crypto Deep Dive. Today we're talking about something that sounds technical on the surface, but underneath it could become one of the biggest structural shifts in crypto trading over the next few years. Because if Wall Street-style speed advantages are now coming to Solana, then we need to ask a much bigger question than just what DoubleZero launched. We need to ask whether crypto is starting to lose one of its most attractive myths: the idea that everyone is basically playing on the same field. This episode is sponsored by Kraken. If you want a serious platform to buy and trade crypto, Kraken is one of the names we trust. They've built a strong reputation in the space. They offer a wide range of assets, and if you want to get started or trade the market yourself, you can use our link in the description. And for a limited time, we're also giving away 20 XRP to anyone who signs up using our Kraken link below. Now, DoubleZero has rolled out a product called DoubleZero Edge, which offers a real-time feed of raw Solana blockchain data designed to get information to traders faster. The company says Edge delivers Solana data over a dedicated global network using multicast, and it is presenting that as the fastest possible access to Solana market data. Now that may sound like niche infrastructure, but it really is not. In traditional finance, the fastest firms do not just win because they are smarter. They often win because they see information first, process it first, and act on it first. That is the entire logic behind expensive market data feeds, premium exchange connectivity, co-location, and ultra-low latency networks. The game is not only about being right, it is about being right before everyone else. And what makes this story so important is that DoubleZero is effectively bringing that same philosophy into crypto, starting with Solana. To understand why this matters, you first need to understand what problem DoubleZero says it is solving. Its argument is that the public internet is increasingly the bottleneck for high-performance blockchains. The claim is that validator performance is no longer limited mainly by compute, but by bandwidth, latency, jitter, and data flow quality between participants. The pitch is that blockchains have been trying to become faster and more scalable while still sitting on top of plumbing that was never designed for this type of workload. That point is actually quite powerful, because for years, crypto has obsessed over block size, throughput, consensus design, virtual machines, rollups, modularity, execution environments, and fee markets. But underneath all of that, there is a brutally simple reality. If the network layer is weak, noisy, slow, or inconsistent, then the whole machine suffers. And DoubleZero's argument is essentially that crypto has spent years upgrading the engine while ignoring the road. That is where Solana comes in. Solana is probably the perfect chain for a product like this to debut on, because Solana is already known for speed, high transaction throughput, active trading, low fees, and a culture that is far more latency sensitive than many people want to admit. This is an ecosystem full of market makers, arbitrageurs, meme coin traders, validator operators, MEV participants, and infrastructure firms, all competing in an environment where milliseconds can matter. If you are going to launch premium Wall Street-style data delivery into crypto, Solana makes sense because Solana is one of the few places where people can immediately see why it matters. And this is where the fairness question starts to bite. Crypto has long sold itself on openness. Public blockchains, public state, or at least some version of public observability. Open participation, permissionless access. The story has always been that unlike old finance, the information is out there for everyone. But that is only half true. Information can be public and still be unequally distributed in practice. If one firm receives raw chain data sooner than another, and can route it through a faster, more predictable network path, then the market is still public, but it is no longer equally accessible in timing terms. And in markets, timing is often everything. This is where some people will say, hold on, that has always been true. Serious traders have always had better infrastructure, better nodes, better RPC providers, better engineering, better monitoring, better collocated systems, better failover, better feeds. And that is fair. Crypto has never really been perfectly level. But what changes with a product like DoubleZero Edge is that the advantage starts to become formalized, productized, and commercialized in a way that looks much closer to traditional market structure. It is one thing for sophisticated firms to quietly build better internal systems. It is another for a dedicated provider to say, effectively, here is the premium speed lane. Now, the supporters of this will make a strong case. They will say faster data is not some evil distortion. They will say it improves market efficiency. They will say tighter spreads, faster price discovery, more responsive market making, and deeper professional participation are all good for the ecosystem. And honestly, some of that is true. Better infrastructure often does improve execution quality. If bad routing, noisy public internet paths, and inconsistent delivery are hurting validators and data consumers, then a more performant network layer can make the whole system stronger. But the critics will make a strong case too, and they should. Because once speed becomes monetized, the natural consequence is stratification. The firms that can afford the best access get faster reads, faster reactions, and potentially better economics. Everyone else gets the public version of reality slightly later. And once that happens, crypto starts to inherit one of the most controversial features of old finance. A market where the official line says everyone has access, but the practical line says some participants live closer to the signal. That tension matters even more on Solana because of how much economic activity on the chain already depends on reacting quickly. Think about liquidations. Think about arbitrage between venues. Think about launch sniping. Think about MEV. Think about moments when a meme coin goes from quiet to vertical in seconds. Think about traders trying to detect flow before the broader market fully processes it. In those environments, the edge is not always about having a better 12-month thesis. Sometimes it is just about getting the data stream first and acting before the crowd. And DoubleZero is not hiding from the broader ambition here. The idea behind the network is not just to make one product faster. It is to build dedicated, high-speed infrastructure for distributed systems that need better communication than the public internet can reliably provide. That means this is potentially much bigger than one Solana feed. If the model works, it could spread into other parts of crypto infrastructure and eventually into any system where timing and data delivery quality matter. That is why this story matters beyond traders. It matters to validators, because better data flow can affect performance. It matters to protocols, because execution quality and infrastructure reliability shape user experience. It matters to market makers, because speed can improve quoting and reduce risk. And it matters to ordinary users, even if they never think about network architecture, because the structure underneath the market eventually determines who wins, who loses, and how fair the whole system feels. There is also a bigger philosophical issue here. Crypto was supposed to be the place where finance became more open, not more gated. It was supposed to reduce the advantage of legacy middlemen, not rebuild it with new branding. But markets have a way of rewarding efficiency, and efficiency has a way of concentrating power in the hands of the fastest and best-equipped participants. So the uncomfortable possibility is that crypto may be rediscovering, through competition, many of the same structural features that emerged in traditional finance. Not because anyone sat down and decided to copy Wall Street, but because markets keep pushing participants toward any edge that works. And this is where listeners should really pay attention. The debate is not simply whether DoubleZero is good or bad. The real debate is whether crypto can scale into a more professional, institutional market without also becoming more unequal in practice. Because those two things may be linked. Better infrastructure may attract more serious capital. More serious capital may improve liquidity and depth. But it may also create a market where the best opportunities are increasingly captured by firms with the fastest pipes, the best routing, the best engineering, and the most money. That does not mean retail is finished. It does not mean open markets disappear. And it does not mean Solana suddenly becomes some closed playground for institutions. But it does mean the romantic version of crypto, where everyone simply reads the same chain and competes on equal terms, looks harder to defend. The chain may be public. The timing will not be equal. There is also a narrative risk here for Solana itself. Solana has built a lot of its identity around speed, performance, and consumer-grade usability. If the next chapter of that identity becomes high-frequency advantages, premium data distribution, and infrastructure stratification, then the chain may become even more attractive to professionals while also looking less friendly to smaller traders. That is not necessarily a fatal problem, but it is a meaningful shift in who the ecosystem feels built for. On the other hand, some will argue that this is exactly the maturation crypto needs. They will say serious markets require serious plumbing. They will say you cannot ask institutions to bring size and liquidity into crypto while forcing them to operate on top of messy, inconsistent public internet infrastructure. They will argue that every mature financial market eventually builds better rails, and that pretending otherwise is naive. There is force in that argument too. The world does not reward slowness for being more democratic. So where does that leave us? It leaves us with a very clear choice in how we think about this story. If you see crypto mainly as an ideological project, you will probably view products like DoubleZero Edge as a warning sign that the space is drifting toward the same hierarchy old finance always had. If you see crypto mainly as an emerging market that needs to become more efficient and more professional, you will probably view this as a natural and even necessary upgrade. For now, DoubleZero Edge is just one product. But stories like this are rarely just about one product. They are usually about direction, and the direction here looks clear. Crypto is becoming more performance-driven, more infrastructure-sensitive, and more like traditional market structure than many people want to admit. So the next time someone tells you crypto is a perfectly level playing field because the blockchain is public, remember this. Public does not always mean equal. In markets, the signal matters. But getting the signal first can matter even more. And if that is the future Solana is moving toward, then this is not just a story about better data delivery. It is a story about power. That is all for today's Daily Crypto Deep Dive. Drop your thoughts in the comments, smash like, follow, and we will see you at the top.